And welcome you tune into Market Cafe with me Ankita Saxena and with me is Kanishka Sarkar. Good morning to everyone. In this show we'll take you through what transpired in the global market, especially the Wall Street, and what's going to be the likely impact in Indian markets, or what are the trade setup or the cues to watch out for before the trading session on D3 starts. Let's take a look at how the US market panned out. Now, it was the first session for the last 7 in which the S&P 500 did not close at an all-time high, and the S&P 500 slid almost 0.3%, while Dow Jones and Nasdaq lost almost 0.5% and 0.4% respectively. Now, the major averages were weighed down on Tuesday as the progress of US trade talks with China became rather shaky. Now, US negotiations ended discussions with Beijing, and the potential extension of a pause on higher China tariffs remains uncertain. Now, postponement of these higher rates won't be the final until Donald Trump signs off the plan. US negotiations are still going on. Investors are also awaiting Federal Reserve's interest rate announcement that will come in on Wednesday afternoon. And the move comes as the street is analyzing earnings report and also awaiting Federal Reserve's interest rate decisions. So that's how the US market shaped up. We ended with cuts. Now remember, the potential talks on tariff with China is still on, and we also have the interest rates decision that will be coming out as of today. Meanwhile, as far as the stock specific action is concerned, Starbucks shares climbed 4% after the coffee chain posted stronger than expected revenue for the third fiscal quarter. On the other hand, we had Visa also that sank more than 2% despite the quarterly results coming in better than what the Wall Street was expecting. Now, the street is awaiting, of course, like I said, for the interest rate announcement, and especially the commentary that the Fed will be coming out of, because we are expecting a rate cut that would be due perhaps sometime in the month of September. So that is something that the investors are waiting and watching out for. So it is largely priced in largely a 98% likelihood that the central bank is keeping the key interest rates within the range of 4.25 to 4.5%. So that's what we are watching out for, a major Fed decision that will be coming out. The earnings front, that is what, and of course the China and US deal, that's something that we are watching out for as far as Wall Street is concerned. But let me bring on board my colleague Kanishka, who's joining us with how the crude is faring. Kanishka, in the last 2 sessions we've seen a jump up coming in crude prices as well.
Right, Ankita. Very good morning to you, first of all. Now, if you take a look at the commodity markets, now oil prices have seen a big jump. In fact, it surged over 3% yesterday, with Brent settling at that $72.5 level and WTI that settled at the $69.21 level. These are both at their record levels since June 20th. Now, this rally was driven by US President Donald Trump threatening new tariffs on Russia in 10 days unless it moves to end the Ukraine war. Meanwhile, US-China talks, as you earlier pointed out, have sort of cooled off trade war fears. Though Treasury Secretary Bessent, he has warned that Beijing over Russian oil imports. Now, optimism around US and EU trade agreement that also supported the sentiment for oil, avoiding a broader trade war. Meanwhile, the deal includes ambitious energy and investment targets, so that's something that's supporting the oil market. Well, now, as you rightly pointed out earlier, markets are now awaiting the US Fed's policy outcome with expectations of a dovish tone. Let's also talk about gold prices then. Now, they have edged up about 0.5% higher to that $3,327 level yesterday, as investors stayed cautious ahead of the US-China trade talks and the Fed policy decision. Now, while the recent US deals with the EU and Japan, they've eased trade fears, as I mentioned earlier, China talks remain tricky, and that's something that the street is watching out for. Meanwhile, the Fed, of course, is expected to hold rates steady, but markets are closely watching on the hints for future cuts. So that's how the commodity market is looking like. But moving on, let's also take a look at how the Indian markets have fared. Now, yesterday, D Street witnessed smart recovery. Benchmark indices snapped out of 3-day losing streak to end comfortably in the green. Meanwhile, Nifty managed to climb above that 24,800 level despite a weak start to the trading session. Let's go across to Ashesha to get us the market action roundup from yesterday.
Well, yes, Kanishka, and what started off as a weak trading session actually turned out to be a good day for Indian markets. And as you rightly mentioned, Nifty ended about that 24,820 mark. Nifty inched nearly 140 points higher in yesterday's trade. As far as Nifty Bank is concerned, that one was underperforming. But despite that, Nifty Bank also ended nearly 140 points higher, above that 56,220 mark. In terms of individual stocks, we had Jio Financial. That one ended nearly 4.5% higher in trade. the biggest gainer on the Nifty 50 index, followed by L&T, which reported its numbers later after market closed. Reliance Industries, that one also inched nearly 2% higher. On the losing side, though, we had SBI Life, Axis Bank, TCS, all of them that were reeling under pressure in yesterday's trade. As far as sectoral indices is concerned, real estate stocks were flying high in trade yesterday. Lodha, that one was up 3.5%. We had Oberoi Realty, Godrej Properties, both of them gaining anywhere between 1.5 to 2.5% in trade today. In terms of individual stocks, we had Paradeep Phosphates reacting to its numbers. That one ended nearly 8% higher. We had Tata Chemical, Torrent Pharma, Varun Beverages, all of them reacting to numbers, and chemical stocks in any case were buzzing in trade yesterday. But today, of course, we have a whole host of news flow with respect to tariffs, where US President Donald Trump said that perhaps a deal with India cannot be signed over the next few days, and India could be levied nearly 25% tariffs. And on the back of that, we are seeing a tepid start for the Indian markets. GIFT Nifty is now nearly 25 points as we speak.
All right, absolutely. That's how the market shaped up. And of course, we are not expecting a great start today as well, because of on the back of the tariff news that's coming in, and then that is really, giving direction to the market as of now. But let's go across to my colleague Pulkit, who's standing by with today's FNO setup. And what does that look like? Pulkit, hi, good morning. Take us through what does the FNO setup for the trade look like?
Good morning, Ankita. If you look at the FNO setup, let's start with the India VIX. It has reduced a bit, and the current value is around 11.52, while in the previous session it was around 12.06. Now let's move towards the put call ratio changes. For Nifty, it is around 0.71, and for Bank Nifty, it is around 0.6, and both are in the comfortable position. No need to worry about it. If we talk about the change in open interest for index future, for Nifty, it is around minus 18.5%, and the activity was around short covering. For the highest open interest strike price, for put, it is around 24,800, and for call, it is around 25,000. Let's move towards the Bank Nifty. So let's start with the change in open interest for index future. It is around minus 17.6%, and the activity was again the short covering only. If we talk about the highest open interest strike price, for put it is 56,000, and for call it is 57,000. Now let's see the FI long position. For FI long position, it is 13.3%. It has reduced from 14.6, and for DI it is 65.7%. It has increased a little bit from 61.5%. Now let's talk about the FNO band share. Only one share is in FNO band, and that is RBL Bank.
All right, thanks Pulkit for taking us through that FNO snapshot and how the FNO setup is looking like for today. But let's also take a look at how which are the stocks that we need to keep on our radar today. And for that, we are now joined by Ashesha, Sharad and Srishti to take us through all the stocks that we will be watching out for in today's trade. Ashesha, let's start with you. Which are the stocks on your list?
Well, yes, Kanishka, let's get started with the top three stocks, all those results candidates, especially from the Nifty pack. And let's talk about L&T first. And it was a strong start to the year for L&T this time around. Revenues have seen an uptick of nearly 15% on a year-on-year basis. Margins have contracted a tad bit to come in at 9.9%, but the order book position for the company is very strong. Order book position at the end of first quarter stood at about 6.1 lakh crore, which is a solid uptick of nearly 25% on a year-on-year basis. Meanwhile, management commentary on private capex is very strong. They say private capex is picking up both in the domestic market as well as in the global market, and they are maintaining their FY26 guidance. So order inflow guidance remains unchanged at 10% and revenue growth guidance of 15% on a year-on-year basis. But apart from L&T, remember NTPC also reported its numbers, and it was a steady state. Revenues declined by about 4% on a year-on-year basis, but largely in line with what the street was working with. Margins have come in at 24.2% versus 28% that the company had reported same time last year. Let's also talk about Asian Paints. It reported its numbers yesterday, but remember some important commentary has come in from the conference call yesterday post market hours, where they say that demand in June and July has been muted, but management is confident of demand recovery from September onwards. So that's some important commentary that has come out, that the management has come out with respect to demand. They say company is targeting single-digit growth in both value and volume terms. As far as competition is concerned, Management says that new player sales have been stagnating over the last few months, and they're also maintaining their margin guidance in the range of 18 to 20%. So on the back of some important commentary that Asian Paints has come out with, although it reported its numbers yesterday post-market hours, the stock will continue to be in focus today.
So L&T, NTPC and Asian Paints, all of them on the back of Q1 are going to be in focus. But let me come to you, Sharad, then. What are the stocks that you have picked out for us that we need to keep on our radar?
For Piramal Enterprises, a strong operational quarter has been recorded, and especially the growth coming in the retail segment. Also, the company has been scaling down its legacy wholesale book as well. Looking at the numbers, the net interest income was down 36% on a year-on-year basis, and in the con call itself that stated that the stress might be there in the MSME unsecured loan and the used car business. Up next, Bank of India strong Q1 numbers as asset quality has improved. Net interest income was down just 3% on a year-on-year basis, while net profit jumped almost 32%. Last stock, Star Health Insurance, weak Q1 numbers coming in, and elevated combined ratio led to the weakness in the PAT numbers as well. Gross premium written was just up 4% on a year-on-year basis, while the combined ratio deteriorated to 102.2% from 99.1%, and even the PAT took a beating of roughly 18% on a year-on-year basis. The solvency ratio also reduced from 2.22 to 2.229x. So overall, the weak set of numbers coming in for Star Health Insurance.
All right, thanks Sharad for that list. But Srishti, now coming to you, which are the stocks that you have picked out for us? Several defense names and insurance names on your list.
Well, indeed, select earnings candidate as well. Let's start with New India Assurance. The company did come out with a good set of numbers rather, because the profit has seen a jump of 80% on a YOY basis. If we talk about the gross written premium, that has seen a surge of 13% on a year-on-year basis, and the net earned premium stands at 9,369 crores, and that's a surge of 10%. And along with that, the company's market share has actually increased from 14.65% to 15.5%. So that's the earnings scorecard of New India Assurance. Good set of earnings. But other than that, today, of course, all eyes will be on JSW Steel, because do remember just yesterday the stock was on the up move, and today we're getting to know that Supreme Court has agreed to hear JSW Steel review plea in Bhushan Power case, because this development comes as a relief for JSW Steel, providing it one legal opportunity to retain the control of Bhushan Power. That is a company that they took over in March 2021 through corporate insolvency resolution process. So all eyes on that as well. Along with that, defense counters will be in focus, as Prime Minister Narendra Modi and the private says that the private sector is making major strides in India's defense space, and defense production has increased by 250% in the last 11 years, and the exporting defense counters as well. Defense is doing really well in the overseas market as well, and because of this commentary, let's watch out for select defense counters. And lastly, Muthoot Microfinance, a positive news flow coming in as the company expands its footprint in the northeast and commences operations in Assam, opens its first branch in Guwahati. That's the news flow that we are tracking here. Back to you.
All right, Shrishti, Sharad, and all of you, thank you so much for joining us with all the stocks that we need to watch out for in today's trading session. But let's move on and get on board our global guest who's now joining us, Peter McGuire, the CEO of AustraliaTrading.com, who's now joining us. Hi, Peter. Good morning to you. Thank you so much for taking the time out and joining us today. Peter, the hottest news right now in global markets in India, both is the tariff news. A big news coming in yesterday just before the 1st of August deadline for tariff for India is that Donald Trump is basically saying that India might be hit by a good 20 to 25% tariff. Now, though India is a good friend, but India is charging more tariff than any other country. What are your thoughts on that? Because Japan has been able to negotiate a good 15% tariff, but for India, it seems that the situation doesn't seem to be that great.
No, and good morning. I tell you what, it's really hit everyone by surprise, certainly looking at it from the fabric of the tariff deals and who's getting what and how it's being put together, and then the situations naturally also with China. So as it rolls forward, I think it's hit everyone by surprise, and it's taking a little bit of a gulp to digest the impact that this is going to serve on naturally the Indian economy. And moving forward, what is President Trump? Is he able to negotiate at a later stage to the benefit of the strategic relationship between India and US for the benefit of India. So I think it's a bit of a wait and see at the moment, but it's certainly going to be felt, I would think, by companies manufacturing in India would have to warehouse that cost.
That's right. Hi, Peter. This is Kanishka also joining in. Well, that's about tariffs, but I also wanted to talk to you about the oil prices. You know, there's been a 3% jump in oil. It's more about Trump's, what do you think? Is it more about Trump's pressure on Russia on easing trade tensions? Or, and you know, with Brent and WTI, they are at the highest level since June 20th. So do you think this rally is sustainable, or is it just news driven? What, like, if you could help us with your near-term price targets for both Brent and WTI?
Well, good morning again. I think it's first off, yes, I feel as though it's news driven. Secondly, the impact as far as Russia, we're all very conscious of that and how it's going to be impacted from secondary sanctions on purchasing Russian crude, the impact that that would have on China and other countries that are purchasing that crude. President Trump certainly, you know, everything that I've read is certainly not concerned about a higher price at the moment. He's prepared to increase his own production significantly. So the whole situation, I think, has just had a little bit of, hot energy, pardon the pun, driving prices up. I feel as though it'll probably cap out at this sort of mark unless we were to see something dramatic happen. And I think that it was probably a little bit of overselling. The market's trended up, and I'm listening to what the likes of Howard Lutnick and Scott Bassett are saying as far as moving forward.
Right. Peter, let's keep with crude then. I mean, we have seen some crazy levels on crude. In fact, we were sub 70. We have seen some major moves coming in on crude. What are the levels that you're watching out for as far as crude is concerned, or generally oil is concerned? Because we've suddenly seen a jump up in oil coming in. Levels that perhaps you would see oil perched at by the end of this year?
Well, I think it's still going to be range bound, unless we see something dramatic happen from geopolitical, secondary tariffs, uncertainty across the production side, or you're looking at weather outages. If it stays as relatively fine weather moving forward, then I feel as though you're still going to be that $60 to $70 price handle. I expect there's going to be a glut end of Q3, start of Q4, and leading up until that point, you could see a little bit of volatility. But overall, I feel as though the prices will trend to the downside more than the upside. And so that's where we sit at the present time, looking at the market. And I think by year end, I think consumers are going to be more satisfied than what they are at the present.
All right. Thanks, Peter, for that view. And thank you so much for joining us this morning and helping us, weigh in your thoughts when it comes to tariffs and both the jump up in oil prices. Thanks so much for joining us. On that note, we'll let you go.
Thank you.
Well, that was about tariffs and crude prices. But let's move on and also talk about the cues that we need to be watching out for today. Well, first up, let's talk about the cues that are coming out of the U.S. Now, U.S. Fed rate decision is something that we will be watching out for, not just the decision on the rate cut, but also the commentary that is likely to come out after the rate monetary policy decision. That is something very key to watch. Apart from that, US GDP data is also something that's going to be out today, so key to watch. Other than that, in the Eurozone, GDP data is also something that we will be watching out for. Apart from GDP data, in the Eurozone, we'll also have the consumer confidence data that is something we will be watching out for. Now, in terms of global earnings, we have HSBC, Microsoft, Meta, Qualcomm. These are all the names that are going to report the earnings for their April to June quarter this time, today later in the day. Now let's just focus back home and take a look at all the earnings that we are going to be reporting back home in India. Now in terms of Nifty earnings, we have Tata Steel and Power Grid that will report their numbers today. And apart from that, other than Nifty 50 companies, lots of other companies as well which are going to report their earnings, including the likes of KPIT Tech, Indus Towers, Navin Fluorine, CANS, Interglobe Aviation and ITD Cementation. These are the companies that are going to report their first quarter results later today, so something that we will be keeping our eyes out for. Apart from that, lots of AGMs also in focus today for the likes of AB Real Estate, Greaves Cotton, Piramal Pharma, First Solutions. These are the companies that will host their AGMs today. So the cues that come out of these AGMs is something that we will be watching out for. Apart from that, it's also the last day to buy shares to be eligible for a dividend when it comes to companies like Balkrishna Industries, BPCL, Coforge, Godrej Agrawat, Granules, JK Tyre, United Breweries and V-Guard. So these are all the cues that we will be watching out for. Lots of companies to focus on. Ankita?
All right, so a lot of cues to watch out for there, but we'll get you more updates. But we'll take a short break here and we'll come back with more updates on the market on the other side. Stay tuned. Welcome back. You tune into Market Cafe. Let's take you through the top headlines in a quick news fatafat. Well, the first up is Operation Sindhu debate that is continuing in the Rajya Sabha today as well, with External Affairs Minister Dr. S. Jaishankar's address at 1 p.m. And the leader of the House, J.P. Nadda, is expected to speak around 3 p.m., while the Home Minister Amit Shah is likely to deliver the concluding remarks. And India has leapfrogged China to become the top smartphone exporter to the US for the first time ever. In the second quarter, 44% of US smartphones imports came from India, up from just 13% last year, while China's share has plunged to 25% from an earlier 61%. Apple is leading the charge as trade tensions and tariff fuels a major supply chain realignment. Vietnam now sits in the second place at 30%, further squeezing China's tech dominance.
Next up, flash floods triggered by a cloudburst in Himachal's Mandi have claimed 3 lives, left 1 injured and another missing. The death toll in the state this monsoon has risen to 170. The weather department has issued an orange alert for heavy rainfall, and the administration has ordered all institutions to stay closed today. Meanwhile, the Chandigarh-Manali highway is blocked yet again due to a landslide. Next up, in a major milestone for global Earth observation, the NISAR satellite, that's the NISAR satellite, jointly developed by ISRO and NASA, is set to launch today at 5:40 p.m. aboard India's GSLV F-16 rocket from the Satish Dhawan Space Center in Sriharikota. The satellite will deliver high-resolution, all-weather and day and night imaging of the Earth.
And while the IMF has upgraded India's outlook, this, remember, is on the back of a more benign external environment than assumed in the April reference forecast. Now, in its latest report, IMF has raised India's outlook for FY26, FY27 to 6.4%, reiterating India's fastest growing major economy status. Now, but despite the upward revision, there are reasons to be very cautious if what the IMF is maintaining. Let's listen into IMF chief economist on factors that has led to an upgradation of the global outlook.
The current trade environment remains precarious. Tariffs could well reset at much higher levels once the pause expires on August 1st, or if existing deals unravel. If this were the case, model-based simulations suggest global output could be 0.3% lower in 2026. Without comprehensive agreements, the ongoing trade uncertainty could increasingly weigh on investment and activity. Further, while exports front-loading has supported global activity so far, firms could become vulnerable if the demand for stockpiled goods does not materialize. The geopolitical environment also remains fragile, with the potential for more negative supply disruptions. While global inflation continues to decline, the latest price data suggests that inflation pressures are building gradually in the US.
Everybody is agreeing that India is a highly resilient economy, which has taken so many shocks in its stride that whatever is happening, it is a shock. There is a Trump shock. But the expectation is that a country that, went through COVID and went through the post-COVID things. I mean, I always keep repeating, 2023, it was called The World is on Fire. This was what Larry Summers said. And the revised figure for India in that year is 9.2%. So when the rest of the world was burning, India did 9.2. So there is no question that when conditions are bad and all our neighbors had to run to the IMF for help, India did so well. So India, there are a lot of very fundamentals which are clicking for India right now. That means that no matter what happens, India should be able to do quite well.
All right, so those are the expert views coming in about the Indian economy, but let's shift focus to some global cues as well. Now, the US Federal Reserve is expected to hold rates steady this week, but the meeting will be far from dull, with key governors hinting at dissent and inflation concerns due to Trump's tariffs. Fed Chair Jerome Powell will have to walk a fine balance. A rate cut is unlikely before September, but all eyes are on Powell's press conference for clues. Now, experts believe that this could be the most suspenseful no-change rate decision in years.
All right, moving on then, coming to the US and India trade deal talks now. ET now has learned from sources that a US trade team is likely to visit India on the 25th of August. And this will be the 6th round of talks for India-US trade deal. My colleague Sumita Karir is now joining us with the details of that. Sumita, take us through the details of this visit.
Sources suggest that a team from the United States will be visiting India on August 25th for the 6th round of negotiations for the proposed bilateral trade agreement between the two countries. Remember, India and the United States concluded talks for the 5th round of negotiations for the agreement last week in Washington. It was led by India's chief negotiator, Rajesh Agarwal, his team, and of course, Assistant US Trade Representative for South and Central Asia, Brendan Lynch, from the side of the United States. Meanwhile, both sides, they continue to hold negotiations virtually ahead of the August 1 deadline, which essentially marks the end of suspension of tariffs, relief on tariffs rather, that was imposed by Donald Trump's administration. And for India, that tariff rate was at 26% in April. So India is definitely seeking a removal, some ease coming in on that 26% tariff rate. Besides, it's also looking at easing of tariffs on steel and aluminum and the auto sector. Remember, these issues are an important part of the trade pact negotiations. Meanwhile, India has continued to harden its position on the US's demand for duty concessions on agri and dairy products. New Delhi so far has not given any duty concessions to any of its trading partners in a free trade agreement in the dairy sector. And of course, in this case as well, it is maintaining that stance. Remember, the two countries are looking to conclude talks for the first tranche of the proposed PTA by fall this year. And before that, they're looking for an interim trade pact, is essentially what sources suggest. But before August 1, will there be a pact, or will India continue to have those high tariffs? So will there be an ease on tariffs the Donald Trump administration will be deciding upon? Well, those remain the big questions.
All right, thanks, Sumita, for getting us those details and keeping us up to date with India and US trade deal latest updates. But moving on, let's also get on board Srinjoy Chaudhary, who's joining us on the phone line with more perspective on what Trump's comments could mean for India. Right. So what are you making of these comments coming in, on India? The kind of tariffs that we are looking at, 20 to 25% is something that Trump says could be imposed on India. What are you making of these developments?
Well, whatever Donald Trump says, the opposite is something he considers the next day. So we don't know what President Trump is thinking today, because all these things were said yesterday. Now, it's very important to note that India is going to make certain things very clear to the United States. Apart from everything else, the first thing India has said is that, look here, you wanted something on your whiskeys, we gave it to you. You want something on your motorcycles, we gave it to you. Let's keep this negotiation below radar. That is something which is almost impossible for the U.S. president. So every day you hear something or the other. But India is making one point very clear, that regardless of everything else, don't forget, India has told America, your per capita income is at about $50,000-$60,000. India's is $3,000. You guys are friends of India. Keep that in mind. Now, that is an issue that India is making it very clear. Let's hope the Americans actually realize this and negotiate in a way that is appropriate.
Point taken, Shinjoy. Thank you so much for coming on board and weighing in on the US and India tariff deal. But even as trade talks continue, Donald Trump, while replying to reporters on the Air Force One, said that tariffs on India could be anywhere between 20 to 25%, adding that the two nations remain good friends, but the deal is not finalized yet.
They are going to pay 25%. India's they're my friends, and he's my friend. And, you know, they ended the war with Pakistan at my request, and that was great. And Pakistan did also. You know, we did a lot of great settlements, including the recent one, as you know, with Cambodia, So that was a great one. I think that's been pretty well finalized now, right? India's been a good friend, but India has charged basically more tariffs than almost any other country. You know that, right? Over the years. But now I'm in charge, and you just can't do that. I think the trade deals are working out very well, hopefully for everybody, but for the United States, they're very, very good.
All right, moving on. Now, the US-China tariff truce is on thin ice. Now, after 3 rounds of talks in Stockholm, negotiators failed to seal an extension of the tariff pause, leaving the final call to President Trump. Now, Treasury Secretary Scott Bessent says the tariffs could boomerang to April levels if no deal is struck by August 12th. Now, Trump, due for a full briefing today, insists that he will have the final word. Now, Chinese officials say that they are still pushing for an extension, urging for stronger cooperation between the two nations.
Right, and the US-China tariff truce is on a thin ice right now. But let's move on then. US business may face a tariff shock, but Treasury Secretary Scott Bessent is also urging businesses not to panic. He's calling the potential 15 to 20% snapback tariffs on imports not the end of the world, while Jameson Greer added that the agreements on rare earth magnets is what the priority will be going forward. Listening to what they had to say after the talks with Chinese officials.
We expressed our concern about Chinese overcapacity globally and what that might mean for this year, for the next few years. We expressed our concern for their purchases of sanctioned Iranian oil, of which they buy about 90%. We also expressed our regret that we believe that they had sold Russia about $15 billion of dual-use technologies. But the overall tone of the meetings was very constructive.
Further technical discussions that are happening right now as we speak among the teams, and so the president can make a final call on whether that's something that he wants to do.
I noticed, as the earlier question said, that the Chinese deputy minister did say that we had agreed on a pause. We have not. Nothing is agreed until we speak with President Trump. He's on Air Force One, I believe, doing a press conference right now. And we will be seeing him in the Oval tomorrow to go over the deal with him. And then he'll decide if the pause continues as is.
Moving on to some more news updates then. Now, U.S. Commerce Secretary Howard Lutnick said that Trump's tariffs in dozens of countries will definitely kick in by Friday, which is the 1st of August, and there will be no more delays. Trump's trade team has sent letters setting new rates, some as high as 50%, with Brazil among the hardest hit. While the China talks run on a separate track, Lutnick said that the deals with the rest of the world will be done by this week's end. Next up, Novo Nordisk shares nosedived 23% after the pharma giant slashed its full-year sales and profit guidance and named new CEO Mazar Mike Dustar, who will replace Lars Jorgensen on August 7th amid slowing U.S. sales of some of its drugs, and including the Ozempic, and rising competition from compounded drugs.
Starbucks posted its 6th straight drop in the same-store sales, but CEO Brian Niccol says that the turnaround is ahead of the schedule. Despite the decline, the coffee giant beat the revenue estimates, with Chinese sales finally ticking up. Niccol will once revive Chipotle, says the momentum is building even as competition and consumer caution lingers. Spotify shares plunged 11% last evening, its worst single-day drop in 2 years after missing revenue expectations, swinging to a loss and issuing weak Q3 guidance. Despite strong user growth, ad-supported revenue dipped 1% and the CEO admitted it's an execution challenge. Losses were driven by rising costs and social charges.
Next up, Procter & Gamble is hiking U.S. prices to cushion a $1 billion tariff blow just as it prepares for a leadership shift. Now, new CEO Shailesh Jejurikar takes over amid consumer anxiety and economic uncertainty fueled by Trump's trade and immigration crackdowns, while Q4 results beat estimates thanks to strong demand and price hikes on essentials like Tide and Charmin. The 2026 sales forecast fell short of expectations. Next up, a devastating earthquake of 8.6 magnitude struck Russia's far eastern Kamchatka Peninsula, sparking tsunami warnings, prompting evacuations and causing some damage, with officials calling it one of the strongest in decades. Now, they added that there were no injuries, but a kindergarten was damaged. An evacuation order for a small town was declared due to the tsunami threat, with the Japan Weather Agency adding that it expects a tsunami of up to 3.3 feet to reach large coastal areas.
That is time for us to slip into a short break. Don't go anywhere. After the break, we are getting you more updates on the market. Stay tuned.
Market Cafe with me, Kanishka Sarkar and Ankita Saxena. Well, let's shift focus to some earnings as well now. Now, L&T, the biggest infra company in India, reported its results yesterday, and it was a rather solid quarter for the company, with the scorecard taking most of the boxes. In fact, revenue and EBITDA were broadly in line with the estimates, whereas profit that actually beat the ET Now poll by a margin of about 6.5%. Now, if you take a look at the numbers, revenue rose about 15.5% on a year-on-year basis to 63,679 crore rupees, whereas profit surged nearly 30% to 3,617 crore rupees. Though margin, they slightly softened to that 9.9% level, down from 10.2% in the same quarter last year. The main, of course, the key was the order inflow, which came in much higher than expected at the 94,450 crore level inflow for Q1. Now, let's take a look at what the brokerages are saying. Well, the brokerages are very upbeat. In fact, Motilal Oswal, it has maintained its buy with a raised target price of 4,200 rupees, citing strong order wins, execution that remains solid as per the brokerage, and a 15 lakh crore pipeline for L&T. Now, the brokerage has highlighted that the company's ramp up in international markets is something that it is watching, and green energy as well is something that is very key and is aiding the company's growth there. Now, the company is also invested in green energy, that is the Panipat IOC hydrogen deal. That is something that MOSL has boasted about. Other than that, Nuvama, that has also retained its buy call and in fact has raised its target price to 4,200 as well. Now, it notes that the sharp execution in energy, that's up 47% on a year-on-year basis, and high-tech, that's up 75% on a year-on basis. And the brokerage expects 15% revenue growth, which is in line with the guidance. Now, if we take a look at what the management said, the management says it is on track to surpass that 4-year strategic goal that it has set, with semiconductors, data centers and clean energy driving the next leg of growth. On the talent front, L&T has clarified that it is not facing any surplus like TCS, and it continues to monitor the situation, but as of now it doesn't have any surplus. So that's how the L&T result is looking like. Moving on, let's also take a look at what Asian Paints results were like. Now, Asian Paints reported a healthy set of numbers in the first quarter. Most metrics, revenue, bottom line and margin, they managed to meet street expectations. The company also saw steady 4% growth in decoratives business. Now, let's go across to Ravinder to see what the result was like.
So moving on then, those were the results, the earnings candidate, L&T and Asian Paints, and let's wait and watch on how they move in the trading session today on the back of their results. But moving on to the next story, the RBI has eased norms for banks and NBFCs investing in alternative investment funds, offering more flexibility but with sharper safeguards. Collective exposure is now capped at 20%, up from the earlier proposed 15%. New norms kick in January. Ankur Mishra is joining in with the details.
Definitely provided relaxations for banks and NBFCs regarding the investment in AIFs. One important change which is need to be noted earlier, there were directions that all the investments which are there in AIF that needs to be provided. In fact, they need to sell their investment. In the new norms which has been finalized by Reserve Bank of India, it has been clarified that only AIS investment in the debtor companies needs to be provided. So that relaxation is being provided by Reserve Bank of India. For instance, if 100 crore is invested by any lender in AIF, and in turn the AIF has invested 50 crore in any of the debtor company, now only 50 crore needs to be provided, not the entire 100 crore. So that relaxation is something needs to be noted, and collected exposure for all regulated entities is now capped at 20%. Also, RBI has capped single entity exposure at 10%. This was even proposed in the draft norms, and that has been kept even in the final norms by Reserve Bank of India. Also, investment up to 5% is allowed without any restrictions. So if any investment is there up till 5%, there need not be any kind of provisioning or any requirement which has been mandated by Reserve Bank of India. But there are still grey areas which many of the AIFs are still asking regarding the share and all these details. So we understand that much of the clarity has been provided by the regulator regarding investment in AIFs, and more so for banks and NBFCs who can make investments in AIFs.
With that, we're completely timed out on this edition of Market Cafe. Kanishka and I will take your leave. Thank you so much for tuning in, but don't go anywhere. At Market Start, we have the market coming up next that will take you through the market this morning. Thank you so much for tuning in.